Well, Sahura will be with you with the global economic outlook in the week ahead, which is going to be the ninth week, the week 9 of 2026. As always, first let's check what we had previous week, and then we can go forward and check the week ahead. While Iranian revolution continues for the 56th day, today is 56 days. And the geopolitical tension is in the Middle East is its highest level. Why I'm saying in the highest level, because already we were waiting to start the escalations, the military escalations at this weekend. So I mean, many news agencies, many analysts, they were expecting to start the war on Saturday, early Saturday, but so didn't start yet, but the market and the people and everyone, they're waiting for any second that which this war can be started. Anyhow, the geopolitical tension is so high, and during the last week, that was one of the highest or one of the main market mover during the weekend, kept the oil price high, kept the energy price high generally on one hand, on the other hand, kept the market risk at the highest, its highest level around above 20 in the most days of the week. That was one of the market movers, but another market movers was the holidays. I mean, sometimes one of the most important thing that we can do is to do nothing. That's exactly about the last week. Asian markets, especially in China, last week they were closed most of the days. Chinese market was closed. The markets were closed for a whole week, which is going to continue till this Monday as well. From Tuesday, the Chinese markets will be open. Hong Kong was closed till Thursday. I think the Friday they opened. South Korea and most of the other Asian economies also the same. They have 1 or 2 days closed at least. That's closing, being the close, especially on a Monday, which U.S. and Brazil economy also, Brazil economy and markets also they were closed. All of them they made the lower liquidity previous week and created a little bit more scary market. I say scary because when there is a low liquidity, there is a chance of the higher, the bigger moves is higher. So the chance of the bigger move is higher. That's why in this kind of the situation, we can say the market is scary because you don't know what's going to happen because the market dip is so low. And when you have a lower dip, smaller dip in the market, that can increase the I mean the chance of the higher and the big movement. That's why the risk of the market in this kind of the situations usually is high. And other market mover, it was the Wednesday's FOMC meeting minutes of its previous meeting, which showed that most of the policymakers in Federal Reserve, they are supporting more hawkish policies. And this supporting of hawkish policies bring this idea to the mind that maybe we should wait till for a little bit higher for more time, for a little bit longer. That's why we can see the chance of the rate cut. This, if you look at the FOMC CME Group FedWatch tools, you can see the chance of the rate cut for next meeting is less than 3%. I think if I don't mistake, it's about 3.5%. Yeah, it's about 3.5%, while the rate cut chance for April for the next meeting for 2 weeks meeting is around 17%. But for which they both of them they are not important because usually generally the market didn't have any idea or expectation to see the rate cut in March or April, but the market's waiting mostly for rate cut in June 17. And now you can see the chance of the rates cut is lowered to 45%. It was around 50 some, between 55 and 60%, the chance of the rates cut. Now it's lower, less than 45%, even less than the chance of the holding the current rate for the June. That was one of the main market driver. At the same time, we shouldn't forget about the decision which we had in the Supreme Court in the United States, which decided to, I mean, the final decision was that Mr. Trump's or President Trump's tariffs, they are illegal and they should be recovered. So we don't know whether they're going to pay back the tariffs or not. Still, there are too many questions, but it's interesting that Mr. President Trump says that he has a backup plan and is not going to take back, to step back from the tariffs and the decisions that he had. That's why the situation is a little bit riskier on that. And however, generally they're canceling the tariffs, gave us some positive idea, positive somehow we can say giving some positive energy to the markets. On Friday, stock markets closed a little bit higher, but generally the risk is still as high there. And President Trump said that he has the plan B for that, and let's see what can happen. He already announced another 10% tariff, global tariffs, this one for everyone. Yeah, that was generally what happened around the market. But what happened in the economic calendar? We started with the weaker GDP in Japan, while the other markets were closed in Australia, in Asia. The Japanese inflation, Japanese quarter GDP increased only 0.1% quarterly in the fourth quarter, while later we saw that the inflation also is lower. Now, while the inflation is lower and GDP is also lower, that's why we can say, okay, there's a less chance right now to say that the Bank of Japan is going to hike the rates. Especially we know that Mr. Takeshi is not supporting the idea of the hawkish policies. She and her parties seeking after more dovish policies to support the economy. That's why we can say that the chance of the rate hike is low right now, but at the same time, on the other hand, we can see that the weaker yen. And this weaker yen is putting some pressure on the Japanese central bank to hike the rates, because the spread that right now between the rates in Japan and other economies putting too much pressure on the Japanese economy, making the supporting the idea of the idea of carry trade, and this carry trade also bringing the carry trade to the Japanese yen, and this carry trade also putting another negative pressure on the Japanese economy, Japanese yen. We should be a little bit more careful about that and see how the central bank is going to decide about that and how they can intervene in the money market or in the forex market. Let's wait and see. But there is that's the point that the central bank and the government should think about them before making any decision whether to hold the rates or hike the rates. Industrial production in the Eurozone fell by 1.4%, while European economies somehow, the other data that we had during the week showed that economies in the Eurozone is somehow getting stable a little bit, especially with the PMI numbers that we saw on a Friday. But at the same time, still they have weak numbers. They're looking at this number, or ZEW economic sentiment, which shows that the German current economic condition at -65, better than -72, but still -65. Or German ZEW economic sentiment fell to 58.3 again. Still low, but again falling lower. These numbers showing that the European economies trying to get stable, but still struggling. And that's why we can say that we should be a little bit more careful when we're talking about the European economy, say that whether they're growing or not. And there is still many talks and the different idea about in a central bank, European Central Bank, ECB, about the rates cut or not cutting the rates, support. This conversation is coming. It's like raising right now. That's whether we should cut the rates or not. That's too many talks about that. And I think that the European Central Bank, they should cut the rates, because they have to find a way to support the economy. The consumer demand is very low right now. People, they are not ready to spend the money. So the factories, they should find a way to do something for this. This is but they got not the factories, not just only the factories, government and the central bank. They have to think about that, how they can encourage the people to go out and spend the money. That's something that should be thought about. That German CPI inflation at 0.1% monthly growth, showing that the inflation is so low. Yeah, we can say that somehow this AI supporting of automation and automation and support just like bringing the cost lower, hold the inflation lower, hold the prices lower, but still, it's not a main reason. The main reason in the Eurozone is lower demand by the consumer. The same thing, that same problem that we can see spreading towards the Canadian economy as well. In United Kingdom, we saw the unemployment rates increase to 5.2%, while the labor market showing the weaker than expected numbers, especially lower earnings, again increasing the chance of the rate cut by British Central Bank later next month in March. March 17, if I don't mistake. Inflation in Canada also showed 0% flat numbers in January, with the core inflation increasing only 0.2% and annual core inflation at 2.6%. These numbers says that the Canadian inflation also holds, you can see the wholesales at 2%. These numbers again showing that the Canadian lower inflation and lower retail sales, lower sales generally is bringing the idea of the weaker demand by the consumer already came to the Japan and the China, came to the Europe, and now we can see that in Canada as well. Again, I think that this is something globally, and we should think a little bit more about that, what we can do. The economies and the governments, they should think about that. It's very, very important alarm for the economy. You can see this trend of the lower demand by the consumer. That's something that we should think about that a little more. We should talk about that, think about that more, and find a way. On Wednesday, we had Japanese trade balance, Japanese trade debt. The Japanese trade was amazing. Actually, main reason is because of the weaker yen. I mean, the weaker yen supported the Japanese export to jump by 16.8%. That's supposed to be mostly because of the weaker yen, which is increasing the chance of the export and the chance of the weaker prices for the Japanese product. That can be one of the main reasons, but generally the Japanese economy showed amazing growth in January. New Year's, actually New Year's sale was December, but anyhow, that was amazing number that we had in Japanese economy. At the same day, we had a central bank meeting in New Zealand where they hold the rates at 2.25%. After several rates cut, our RBA decided to hold the rates and see the market reactions and the result of this several rates cut that they had already before. And now I think that they are in this level of the holding the current rate and wait and see. I mean, while this, for example, the Federal Reserve is thinking about the higher for longer, for New Zealand, which we think about the wait and see position for the central bank. Inflation in United Kingdom fell to 3% from previous 3.4%, with 0.5% monthly drop, showing that central bank in United Kingdom has, I mean, opening the doors for the central bank in United Kingdom to cut the rates. That's supporting the idea, says that, okay, there's a weaker economic growth, there's lower inflation. Even thought the retail sales was better. I mean, on Friday, we had the numbers that slightly better retail sales and PMI numbers, but they were just like a positive number after several negative numbers. They cannot change the idea, but the most numbers that we had from Europe, from British economy, they were weaker than expected, weaker than compared with the previous months, supporting the idea now the economic growth is weaker, inflation is lowering. Now the central bank can cut the rates and support this weakening economy. Housing markets on Wednesday data showed that the U.S. durable goods orders and housing market doing a little bit better. Housing starts increased by 0.90. Housing starts on the monthly scale, 3.9%, sorry. Housing starts increased by 3.9% in November, and in December, I'm trying to find a December number. Just like 2 months, they published 2 months numbers together, and that's confusing. Housing starts increase anyway in December. The most important number is the December number. Housing starts increasing in December. Yep, there we go, 6.2%. On the monthly growth increased by 6.2% on the monthly base, with 1,404 thousand units, shows that the fine. I mean, the housing market is going fine. The start is fine, and it's important. Why? We can see the pending home sales is dropping. Dropping pending home sales, I told before, is mostly because lower inventories and we don't have too many home for sales. The people that they bought the home already, they bought in a good prices. They are not ready to sell it. And because if they sell it, it's hard to find affordable prices to buy. That's why selling the many people that they have the home, they are not ready to sell their homes or even to exchange the home to find a new home with the higher rates. That's making that's bringing the, I mean that's one of the main reasons that we can see pending home sales usually weaker, but new home sales and new homes this building starts, they are building permits starts, housing start, they are not a little bit better positive numbers. That's the main reason. Industrial production in the United States in January increased by 2 point almost 3% on the annually and 0.7% monthly scale, showing the fine. But just economic data on Friday was most important. We will talk about that a little bit later. On Thursday, unemployment rate in Australia stayed unchanged at 4.1%, while employment changed at 17,800, shows that the weaker labor market in Australia. Australian Central Bank increased the rates by 25 basis point previous meeting, in its previous meeting, because of a higher inflation, or we can say they're increasing the inflation. But with the economic data that we had so far during the after previous meeting in the labor market and economic growth, bringing the idea of the economic growth in Australia is getting weaker. That's why most probably in the next meeting, the Australian Central Bank, we will not have the rate hike. That's somehow we can say is for sure. But there is also the chance of the rate cut. We will have to wait and see. But it's increasing this weaker data that we can see in the labor market and other economies, data that we had from Australia. That's increasing the chance of the rate cut. US labor market on this Thursday once again confirmed that labor market is fine with only 206,000 newly new applications to get the unemployment rates, unemployment benefits. And 4 weeks average also at 219,000, if I don't mistake. That's showing that the US labor market is doing fine. Continuing claims fell to 1,806,000. I mean, increased slightly to 1,869,000. Slightly, I mean, weaker than previous week, but still much lower than 2 millions, much lower lower than 1,900,000. Usually we're supposed to sell before. I mean, we're supposed to. We used to see. Sorry, we used to see before pandemic. Generally shows that the U.S. labor market is doing fine. Even if we say that okay, for the some new condition that we have in the economy, maybe we cannot trust too much on the other labor market data, but applies to get the unemployment rates, unemployment benefits is one of the numbers that we can trust on that. When we have a list people trying to get the unemployment benefits, that shows that the people have a job, the people have an income. That's why we can say the US labor market is doing fine. And I mean, I cannot say this doing great because we can see the unemployment rate at 4.3%, but at least we can say it's doing fine. We shouldn't be worried too much about that. Again, this number supporting of higher for longer, especially if you look at the Friday's PCE numbers and core PCE numbers. And we'll talk about that. Let's say that after that, I will go other economies. Look, core PCE price index increased by 0.4% monthly and 3% annually. Both of them, they are higher than expected in previous months. The same PCE price index on the monthly basis, 0.4%, annually 2.9%. Again, higher than previous months, higher than expectations. That says inflation is increasing. Labor market is fine. So the central bank has enough reason to hold the rates for higher at a higher level for a little bit longer. You could see this in FedWatch tools, as mentioned at the earlier. Now we can expect the expectations for the rate cut is is much lower right now compared with the previous numbers that we could see, especially for June. That says that says that we can expect the central bank's decision to a little bit more hawkish to expect a little bit more hawkish comments from the Fed speakers during the next week as well. Anyhow, we had other economic data as well, especially, for example, the new home sales, as mentioned, the new home sales in November, 15% increase. In December, fell by 1.7%, but generally we can see the new home sales is fine. I mean, like a 15% increase in November. Generally, we can say the other economic data that we had, they were mixed. GDP in the fourth quarter in the previous month, in the previous quarter, in the fourth quarter of 2025, increased by 1.4%. That was one of the other economic data that we're supposed to, yeah, here again. One of the numbers that we should watch that more closely is the fourth quarter GDP growth of 2025, increased by 1.4%, much lower than 4.4% expectations that we had before, and 2.8% later. The main reason is because of this 43 days government shutdown that we had, and this government shutdown negative reaction, we can see this negative reaction of this government shutdown here. And that says us that we should be a little bit more careful about our economic growth expectations, whether it can grow fine or not in the first quarter or later. Anyhow, that was one of the negative numbers that we had. Same negative numbers we had in the PMI numbers as well. We saw that the manufacturing and the service PMIs weaker than previous months for February. That was what happened generally previous week. Looking at the week ahead, gonna be important week, mostly because of, again, the geopolitical changes across outside of the economic data. As for economic data, that the week ahead should be a little bit more important for European compared with the Americans or US market. Starting with the IFO business climate and IFO business expectations in Germany, and we are again expecting slightly better number to confirm that the European economy is getting stable. Not better, but it's getting stable. We cannot say it's going to, wow, the economy grows, European economy is starting to grow. I have still the doubt on whether the European economy can grow further or not in this condition or not, but at least I can say it's getting stable. That's getting stable is a little different with the saying that it's increasing or moving better. And Monday, still the Chinese market is closed. The Chinese market and New Year holiday finally will be finished next Tuesday, and at the same day, Chinese Central Bank or People Bank of China also will have the monetary policy meeting and interest rate decision. We are expecting to see they will hold the interest rates at 3% and 3.5% for 1 and 5 years loan prime rates. Tuesday will be important mostly because of speeches that we have. Generally, the next week we will have too many speeches, too many speakers from the central banks. Bank of England, European Central Bank, and Federal Reserve, especially the Federal Reserve. And now, after the court's decision that we had previous week in the United States about the tariffs, and Supreme Court, that they canceled the Trump tariffs. After the Supreme Court decision in US, and after the inflation and labor market data that we had previous week, now it's important to see what policymakers in United States is going to tell. In UK also, after weaker inflation and slower inflation and weaker economic data, better to understand earlier what, like, Bailey or other BOE members, what they're thinking about the rate cut. Most probably they can support the rate cut, and I think about that they're going to support the rate cut, and we will see 25 basis point rate cut in the next BOE meeting. CB consumer confidence in United Kingdom in United States, sorry, on Tuesday, expected to slightly increase to 87.6. but 87.6 is very low. Why the CB consumer confidence is very important? As mentioned before, the same problem that we have in Europe, we had in China, we had in Japan, then we had in Europe, and now we have in Canada. We're scared that whether we will have that in the United States or not, because weaker confidence means that the client, the people, the consumer, they are not ready to spend the money. And if they don't spend the money, it means that the economy is not improving. If you spend less money, the GDP will be lower, the economic growth will be lower, and that's negative, very negative point for the economy. We should be careful about that and watch the CB consumer confidence numbers more closely. Wednesday, we will have the German GDP numbers. It's important to watch. BOG inflation numbers, which is expected to slightly fall to 1.9%, and Australian inflation also, which is expected to increase slightly higher, between 3.5% and 4%. But market will focus on the European inflation numbers. Why that's very important? As mentioned, European economy showing some stable, giving some stable signal. And inflation fell in the previous numbers, we saw that primary numbers for the January showed inflation at 1.7%. The final number for the January also most probably will confirm this 1.7%, which means European economy is getting stable, inflation low. When we are talking about the stable, I'm not talking about it getting better. It's getting stable at weaker points that the weaker, it somehow is finding the ground here. And now you can see the inflation also low. I think that means inflation is low, opening the doors for European Central Bank to cut the rates to support this economy, which is already weakened. If European Central Bank doesn't support this economy with the rate cut, most probably we will see the European economies in a crisis. That's why I think that's a very important momentum for the European Central Bank. If inflation fell to 1.7%, if inflation didn't fall to 1.7% and we saw inflation higher at 2%, that's changing the different, that changed the scenario. But if we saw the inflation at 1.7% and the core inflation around 2%, 2.2%, 2.1%, I think that in that case, European central banks should go towards rate cut in its next meeting and support the economy. And finally, Thursday, as all Thursday, we will have the jobless claims for U.S. economy. We are expecting again to see the numbers between 200 and 220,000. Again, the same numbers as we saw in the previous weeks. The 4-week average also should be around these numbers, which means if we see again these numbers, again, it can confirm the U.S. labor market is moving fine. We should expect the higher for longer. That can confirm that. And later on Friday, GDP numbers from European economies should be watched more closely. Unemployment rate from Brazil, which is expected to be around just like 5.1 or 5.2%, not higher. And Canadian GDP numbers in the first quarter should be watched closely. But anyhow, just like as mentioned, just like we have too many numbers, too many economic data to watch, but probably US economy, mostly we should watch news and headlines about the economy, not economic data. We don't have much economic data to watch. Let's go and check the charts to see what's going on in the charts. VIX at 20 shows that the market risk is very high. This risk showing that we should be a little bit more careful about the risky assets and about the safe havens. The higher risk mostly is following geopolitical tensions in the Middle East. Follow the news. Let's see what's going to happen there. The risk of the war is getting higher. On the other hand, the higher risk in one hand, on the other hand, the higher for longer expectations from the Federal Reserve or the U.S. Central Bank holding the U.S. dollar at its a little bit higher, and that's why you can see the dollar index around 97. At some point, we saw the USD index at around 98 as well. Now we can see the DXY at 97.7, which shows a very high level for now. While US dollar index was increasing, I mean, we could see the stronger dollar. At the same time, we saw the stronger, higher prices for the gold as well. Gold price about 5,100, showing that the market risk is so high and this higher risk increasing the demand for the safe haven. At the same time, we saw the central bank also to buy the gold a little bit more. Same reaction we had in a silver market also. Silver could prove itself about $81. The $81 is getting somehow pivot number for the silver. On the energy market, gas price again moving between $2 and $2.90 and $3 for some, just like we expect to see the gas price around these numbers. There is no reason to say, okay, the gas price can increase higher or fall much deeper. On the other hand, for the energy market and oil market, geopolitical tension in the Middle East holding the prices higher. While we are even if we erase this geopolitical tensions, we forget about the geopolitical tensions, oil price should be around 55, $56 around this area. So while it should be around this area, and we can see the prices $10 higher, it means that the market already priced this higher tension in the Middle East. And if the tensions get higher than what we have here and the war starts, the maximum oil price, higher prices should be around $10 more than this, which means $20 more than normal expected prices. So don't expect $100, $150, something these numbers if the war starts between the US and Islamic Republic based in Iran. Geopolitical tensions are already priced in the prices, priced in the current prices. Well, if the tensions is for escalations is for some reasons, for any reason, we can see the prices under $60 very fastly because we have oversupply. And this oversupply from April is getting a little more. On the stock market, we can see that the lower high in the markets, in the prices, lower high and lower low, which confirms again that generally, and you can see here the flag is getting candlestick. These numbers and this condition in the market generally shows that markets mostly is a side movement with the downward tendency because of higher risk in the market, overpriced stocks, and all these numbers putting pressure and the doubt in the market whether these prices are the real price or not. And also weaker GDP growing United States, weaker expectations for the first quarter from the most after earnings reports that we had, their expectation for the first quarter was weaker. All of them, they are bringing this idea that these expectations in the market that we shouldn't expect to, much more higher prices for the stocks, at least for the short and mid-term for now. For longer time, it's different, but for short term, for this week and the next weeks, most probably we can see the side movement with the downward tendency for S&P 500, Nasdaq, Dow Jones, for all of them. At the same time, same condition we can expect for the Bitcoin and the cryptocurrencies market. There is no positive news. There is no positive reason to say that, okay, that's the reason that we can expect the gold, the Bitcoin price or other cryptocurrencies prices to be that they will start increasing. At the same time, we will have the options going to be expired at this week. That can also put another pressure on the Bitcoin prices even before these options, even if the price is slightly get higher, but after the option expired, I think probably February 24 or 5, something like that. We expect higher pressures on the prices for the Bitcoin as well for the this weekend. The price is lower than $70,000. Don't like the Bitcoin have somehow trying to create a ground around $67,000, but we saw the same reaction around $90,000 as well. So don't. We should be a little bit careful whether that can fall further or not, but we shouldn't hope too much that, okay, now it's creating a ground here, putting some ground here, it's creating some support here, and prices can start increasing from here up higher. Generally, the prices are negative. The environment is negative with the cryptocurrencies, especially if the price fell under $65,000. Right after that, we can expect 62,000 and 58,000 US dollar for the Bitcoin. That was what happened previous week and what we are expecting for the week ahead. Hope it was useful for you. Talk to you soon. Have a good day. Bye bye.